Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate finance so you don't have to. Today we're diving into SRX Health Solutions, and let's just say they've been busy securing some new funding that might just change their game or make things a lot more interesting. Before we get into the nitty gritty, if you like getting the real story behind these corporate filings, hit that subscribe button and join our Discord community linked down below. SRX Health Solutions is a company that's been on our radar, and their latest filing, a Form 8K, tells us about some significant deals they've inked. Think of this as a company announcing major news that investors need to know about right away. This report details two main events. First, SRX Health Solutions has entered into an equity line of credit. And second, they've also secured funding through convertible notes. Let's unpack what this really means for them and for us trying to understand their business. First up, the equity line of credit. Basically, SRX Health Solutions has made a deal with a lead investor that allows them to sell their common stock to this investor over time. They can raise up to $50 million depending on how many shares they sell and how the market is doing. Now, this isn't like a traditional loan where you get all the money at once. Instead, SRX can decide when to sell shares and how many. The investor is on the hook to buy them, as long as certain conditions are met. One of those key conditions is that SRX needs to have a registration statement declared effective by the SEC. This is essentially the green light to sell shares to the public. So SRX has the option, but not the obligation, to sell these shares. They can do this whenever they think it's a good time and price. The investor, on the other hand, is obligated to buy when SRX says so, up to a certain limit. It gives SRX a lot of flexibility to access funds as needed, which is pretty common for companies looking to grow or manage their cash flow. As part of this deal, SRX agreed to issue $1 million worth of their common stock to the lead investor right away. Think of this as a fee for the investor's commitment to buy shares from SRX later. They also agreed to pay the investor's expenses up to $35,000. Now here's a crucial detail. Under American rules, SRX can't sell more than 19.99% of its outstanding shares to this investor without getting shareholder approval or selling at a price that's considered at market by the exchange. This is a way to prevent a massive dilution of ownership for existing shareholders unless the price is really good. Also, the deal has a clause that prevents the investor from buying shares if it would make them own more than 4.99% of SRX's stock. This is a common practice to prevent overly concentrated ownership by a single investor. In these types of agreements, the net proceeds from this equity line of credit will likely be used for working capital and general corporate purposes, which is a pretty standard phrase for we need cash to operate and grow. Next, let's talk about the convertible note financing. This is another significant funding round for SRX. They've sold about $7.65 million worth of senior secured convertible notes. These notes also come with warrants, which are like options to buy more of SRX's stock in the future. These notes carry an 8% annual interest rate and are set to mature in July 2027. The really interesting part is that these notes are convertible into SRX's common stock. This means that if the stock price goes up, the investors holding these notes might choose to convert them into shares instead of getting their money back plus interest. The conversion price is set at $0.6274 HES per share. This means if SRX's stock trades above this price, investors can convert their debt into stock, potentially profiting from the increase. The warrants, which are like a sweetener for this deal, are exercisable for 3 years at the same price of $0.6274 HES per share. To back these convertible notes, SRX has also entered into a security agreement. This means the company has pledged certain assets and equity in its subsidiaries as collateral for these notes. This makes them secured notes, meaning if SRX fails to repay the debt, the investors have a claim on those specific assets. This is a pretty serious commitment and shows how important this funding is to SRX. Now, both of these deals, the equity line of credit and the convertible note financing, were sold in unregistered offerings. This means they didn't go through the full registration process with the SEC. They're relying on exemptions like Section 4A and 2 of the Securities Act, which is typically used for private placements where the investors are accredited, meaning they meet certain income or net worth requirements. Both the lead investor and the other investors involved in the note purchase represented that they are accredited investor, and the other investors involved in the note purchase represented that they are accredited investor, and the other investors involved in the note purchase represented that they are accredited investors and are buying these securities for investment purposes, not to immediately resell them to the public. These agreements, the common share purchase agreement and the registration rights agreements for both deals, are attached as exhibits to this filing. They contain the usual representations and warranties that parties make to each other in these kinds of transactions. For example, the investor in the equity line of credit agreed not to engage in any short selling or hedging of SRX's common shares. It's important to note, though, that these agreements are really for the benefit of the parties involved and not meant for investors to get the full picture of the company's current state. For that, investors should look at SRX's other filings with the SEC. And one more thing, there's a press release dated July 8, 2025, also included as an exhibit. This is likely how the company formally announced these deals to the public. The filing is signed by Carolina Martinez, the Chief Financial Officer. This shows that the company's top financial person has reviewed and approved the contents of this report. So what's the story here? SRX Health Solutions has successfully secured significant funding, both through a flexible equity line of credit and a secured convertible note offering. On the one hand, this shows confidence from investors and provides SRX with capital for working capital and general corporate uses. The equity line of credit offers them flexibility to raise funds as needed, while the convertible notes, especially with the security backing them, signal a strong commitment from the investors. However, there are always things to watch out for. The equity line of credit, while flexible, could lead to dilution for existing shareholders if SRX decides to sell a lot of shares, especially if the stock price is low. The convertible notes, if converted, will also increase the number of shares outstanding. The fact that the convertible notes are secured is a double-edged sword. It makes the debt less risky for investors, but means SRX has put up valuable assets as collateral. If the company struggles, those assets could be at risk. We also need to remember that these deals were unregistered, meaning they were private placements based on accredited investor status. In my opinion, SRX is making strategic moves to bolster its financial position. The dual funding approach gives them options and strengthens their balance sheet. The successful acquisition of these funds suggests that investors see potential in SRX's future. However, they need to manage this new capital wisely and ensure that the potential dilution from these financing instruments doesn't significantly harm the value for existing shareholders. The success of these financing arrangements hinges on SRX's ability to execute its business plan and generate returns that justify the capital raised. What's your take on SRX's latest funding rounds? Do you think this puts them in a stronger position, or are there red flags you're seeing? Let me know your thoughts in the comments below. If you found this deep dive helpful, please give it a thumbs up and subscribe for more. And don't forget to join the conversation and connect with fellow finance enthusiasts in our Discord community. Thanks for watching Corporate Deco. See you next time.